Good morning. Welcome to Las Vegas FYI. Marie Siren. It is so important to talk to an expert when deciding what to do with your financial situation. We have attorney Anthony DeLuca in studio to give us another perspective about loan modifications. Welcome back to the show, Anthony.
Thank you.
So does your office do loan modifications?
We don't. We're one of the few law firms who specializes in bankruptcy who doesn't do loan modifications, and the reason being is that we built the firm on the premise that we do what's in the best interest of the client, and I don't think loan modifications typically are in the best interest of the client. I think that they're a big money maker for law firms and for companies that engage in loan modifications, but in terms of having any long-term benefits to the client, I think they're extremely limited, if not just completely non-existent.
And so obviously they think the results of loan modifications, you're not too keen on it.
No, even by the government's own records, only about 4% of the people who have applied for permanent loan modifications ended up getting permanent loan modifications. So the failure rate of the program has been phenomenal, and it's certainly not shocking as to the reasons why. I mean, first of all, they require you to even qualify under most of the loan modification programs. They require you to be behind on your mortgage. In other words, if you're paying your mortgage every month and you call up your lender and say, "Hey, can you modify my loan?" chances are they're going to say no. I mean, why should we modify your loan? You're paying it on time.
Right.
So, as bizarre as it sounds, they want you to fall 3 months behind and then call them back to then say to them, "Look, I can't pay my mortgage. Is there anything you can do to help me modify them?" At that point, they'll submit a packet to you. You fill out this massive amount of paperwork and send it back to them. I hear horror stories all the time about how the loan packaging gets lost or misplaced, or they just sit on it, or it's just this bureaucratic mess. And at the end of it, the results are terrible. I mean, there's only really one of a couple things that they can do for you. They're either going to extend the term of the loan, or they're going to lower the interest rate for a set period of time. So this really isn't a permanent loan modification. It's a temporary loan.
So for the long-term effects for someone doing a loan modification, what do you think of that?
Well, what'll happen is they'll take your loan, and it's interesting because even the name, Making Homes Affordable, is what the government called it. Right. And that's all they're doing, is they're temporarily making homes affordable. But they're not making it affordable for the long term. So they'll take your interest rate, they'll drop it down to whatever, 2% or 1%. And so it makes the loan payment affordable for 5 years. But then what do you do after 5 years? I mean, houses here in Las Vegas are upside down by $150,000, $200,000, $300,000, close to 60% upside down on a home. In 5 years, these houses aren't going to have any equity. So after this temporary period in which they reduce the loan rate, right, what happens then? They can't refinance out. They'll be in the same exact situation they're in when they started, which is they won't be able to make the payment. They'll kick the can down the street, and they'll end up losing the house 5 years later. And they'll be much better off if you're in a situation where you can't make the payments now, your house is upside down by 50%. Instead of waiting 3 months delinquent, filing the home loan modification packet, which destroys your credit anyway,
right,
you file a bankruptcy. You just dump the house. You get out from under it. A few years down the road, you buy back into a house that is worth what you're paying on it. Because when you're $200,000 upside down on a loan, you're only renting from the bank, right, and you're doing the bank this great favor. You're not only renting because you have no equity, but right, you're paying the property taxes for them, you're paying the maintenance on the home for them, you're paying the interest on their loans. I mean, isn't that a great thing to do for the banking industry? And if you're going to rent, just go rent.
Right.
Why rent from a bank and pay all their property taxes and everything else for them?
Thank you so much for joining us today. We ran out of time. There's so much great information that Anthony provided us today. If you want more information about Anthony DeLuca or DeLuca Associates, please contact them directly at 252-HOPE or log on to the website on your screen. See you next time on Las Vegas FYI. Have a great day.